that was the goal, I guess, my whole life is to work in finance in Manhattan. Usually, when you accomplish your dreams, you realize how unfulfilling they can be. You're not going to ever 100x your investment or even 10x your investment in a bond. And I think that's the excitement with equities is that you can grow as much as the company can grow. And there's more than one way to skin a cat. So you can have 100 successful investors, but they do things all different. You don't have to do exactly the same thing.
Welcome, everyone. This is Mariusz Konieczny. Welcome back to the podcast. I am chatting with a Wall Street veteran of 13 years, Scott Rubin, who also has a YouTube channel called Scott's Stock Due Diligence. So, Scott, thank you for joining me.
Well, thanks for inviting me.
Yeah, so I wanted to chat with you. I've seen some of your videos. You focus very much on, due diligence, financial analysis, but maybe if you could take a few moments to introduce yourself, tell my audience your background, how you got into the business, and things like that.
Um, yes, I'm born and raised in New York City area, Staten Island, and I guess I don't know if it's a lot of kids like probably a lot of kids were like always wanted to make money, and so I was always interested in ways to make money, entrepreneurship. So that was the goal, I guess, my whole life is to work in finance in Manhattan. So I got my undergrad in Buffalo in finance, and then I worked at J.P. Morgan for a bunch of years in the bond market, and then worked for an insurance company for like 8 to 9 years, also in the bond market, insuring bonds. And then it was around the Great Recession. I was thinking maybe I should start my own business. So I bought into a franchise, Mathnasium, tutoring math to kids. And I did that for almost 10 years. And then I started the YouTube channel. And then I've just been like kind of cons- consulting or just doing odd jobs while I have my YouTube channel, trying to figure out my next step in life.
When you say you were in school studying finance and you wanted to work on Wall Street in Manhattan, uh, was working on Wall Street the dream job you were dreaming about when you were in college?
Yeah, yeah. Because I was really looking forward to working ever since I started school. Even at elementary school, I was just excited to one day not be in school and make money. But I knew I had to keep going and graduate college. So I knew it was going to be a while. Um, and I always wanted to work in finance. And New York City was Manhattan was real close to Staten Island, so it was um, it was just yeah, that was the ultimate dream. And then usually when you accomplish your dreams, you realize how unfulfilling they can be. Because you always glamorize things in your mind, like, oh, if I can just get married, then my life will be complete. If I can just make this amount of money, then my life will be complete. But once you get to that, you realize it's not as fulfilling, and it just leads to more problems. Um, Mainly, like I didn't realize politics was such a big deal. Working, I thought it was who knew the most would succeed, but I did. It was a good experience, and I learned a lot
Now,
working.
what do you mean by politics? Like the work politics?
Yeah, yeah. So it wasn't who knew the most would get promoted. It's generally who had the best, closest relationships with the with senior management would succeed. Um, and I wasn't that good at politics, so it bothered me a little bit. Um, but that's the name of the game. I think it's anywhere. There's some politics with anything, every where you go.
Okay. Now, you spent 13 years working in the bond market, and now you talk about equities. Uh, so why not stay in the bond market? Uh,
You mean uh, why not continue working in the bond market, or why not talk about bonds on my YouTube channel?
invest in the because if you have so much experience in the bond market, wouldn't you find a lot of opportunities in the bond markets? But instead, you talk about equities.
Yeah, I don't think there's just not as much upside. It's kind of capped with bonds because you don't really get appreciation. You generally get it's like you can get like a straight treasury bond, which is like 100% guaranteed, AAA backed by the U.S. government, but you only get like 2-3%. You could make it a little more risky and get preferred equity, which is a hybrid of debt and equity, and you do get some upside, but you're really capped. You're not going to ever 100x your investment or even 10x your investment in a bond. And I think that's the excitement with equities is that you can grow as much as the company can grow.
Okay, so on the equity side, were you what is your investment philosophy? Were you influenced by any particular investors?
Um, I guess I guess I like Buffett a lot because that's kind of my strategy. I respect a lot of investors out there, and there's more than one way to skin a cat. So you can um, you can have 100 successful investors, but they do things all different. You don't have to do exactly the same thing. But I just feel my strategy is similar to Buffett and a lot of investors is long term, buy and hold long term, try to find good stocks, try to get them a good price, and eventually you do get paid off. So that's how I kind of look at it. But I don't really like follow anyone in particular that I look up to, but I do like to learn about investors to see their strategy. But I try to do my own thing.
So in order for an investment to fit your to fit your portfolio, what kind of criteria do you look for?
Um, so I mean, I try to stick with really good companies because I don't want to have to. Um, I don't want to do any trading, too much trading. So if the great companies will perform poorly in a bad market because everyone is performing poorly, and that's fine. But if you wait long enough, usually a great company will grow over time, and you don't have to time it. Um, so, so what I really like in investment is scalability, and I like a product that it doesn't. I don't have to use it, but it has to at least make some sense to me. Um, like Palantir, I don't really. It's hard to really put my finger on what they do. I kind of understand it, but if you can't explain what a company does to like a third grader, I usually don't invest in it. Um, so it's really uh, scalability, good product, and then I just once they have those couple of things, then I just try to understand their financials to see if it's
Okay.
a good investment.
I recently made a video about Oscar Health, and I noticed that you also analyzed Oscar Health. So what are your thoughts on the company, especially now after the recent sell-off?
Um, yeah, Oscar, it kind of fit that like meme stock category where it was growing without really without proving they should be growing, which a lot of companies have. Like Tesla grew, Amazon grew a lot when they were losing a ton of money, but you can see the path towards the future, and they did hit that goal. And all those companies are successful today, make a lot of money. But a lot of companies get overpriced, where they're trading at like 100 times earnings, sometimes even 200, 300 times earnings. So it kind of fit that category where it was really overvalued. Um, and I do like the business model, uh, the telehealth, um, but they're really um, Medicare, like it's really kind of pegged to how the government treats Medicare, and I'm not too, I generally don't invest much in the medical industry, um, but it just, I mean, I don't have that much, I think, good points on Oscar. I just thought it was really overvalued, um, and uh, and I think the risk is a little too high at this point.
So outside of Oscar, what kind of stocks do you like at the moment? Maybe give me one or two.
Well, I've been a big investor in, well, for the longest time, I've been saying my two favorite are Meta and Costco. Um, so I like, so I've been investing in those two stocks a while. I have a few stocks that I tend to invest in, but just stocks that kind kind of make sense. Not so much today. They have to make sense in a long-term basis. Um, where even because a lot of products become obsolete, but if you're a tech company, you usually can get over that because you're
And
growing
you
with the
can
tech
reinvent
market.
yourself and come up with new products, right?
It's a lot easier than if you were selling rotary phones. It's hard to just start selling cell phones one day. It's a totally different business. But yeah, so tech seems like an easy, low hanging fruit type of industry. But within tech, there's so many companies, so it's um, hard to know which ones. But I do like the bigger companies. I think they're the Amazons, the Microsofts. They've proven it.
Do you ever invest in the smaller names, small caps?
Yeah. I guess my one of my best performing stocks is New Bank, the Brazilian fintech. It's not that small anymore, but when I invested in it, it was probably 20, 30 billion. Now I think it's like 80 billion now. So it's up about 300% since I got it.
Well,
So that's
but
semi,
30 billion is still a big company.
it's still a big company. But so I guess I'm trying to think, do I have any, let me open my portfolio. I don't think I have any small caps. I have invested in small caps in the past with not much success. Um, so in terms of if I'm currently holding it, uh, I don't think I have any small caps. Um, Lumen, Lumen, is that a small cap? I think that's a small cap. Um,
Lumen or Illumin?
Lumen, Lumen, Lumen Technologies. Their phone and internet service, but their product is getting to be obsolete. Yeah, they're 4.6 billion market cap. Um, that's like one of the only stocks. I'm down almost 50% on that. So it seems like when I take a risk in a small cap, it usually doesn't pay off. But yeah, so I guess it's mainly sticking to bigger, safer companies.
And what are your thoughts on the state of the economy, interest rates, and now I'm hearing some chatter about Jerome Powell being open to resigning.
Yeah, I mean, there's always going to be shakeups and disruptions, and a lot of times when stuff like that happens, there's there could be a pullback. But in terms of a long-term approach, in short term, I mean, I really don't know what's going to happen. Things always happen short term. In the long term, I don't see. It's to me, it seems like our economy. not just the U.S. economy, but the world economy is so strong, so much stronger than ever. It just seems so resilient. So I'm not too worried about those type of disruptions. Because even when inflation was almost hit 10% in the U.S., which was a big deal, it was short term, and then eventually it came back down to like whatever it is today, 4%. But I try to kind of ignore the noise for investing purposes. I don't really get scared and sell. I just kind of like hold through everything.
Well, I mean that's the thing is that the Fed raised interest rates to combat inflation, and now, you know, the inflation is low, and they still are not cutting interest rates. So that's what creates the arguments or pressure between Trump and the Fed chair,
Yeah,
because Trump obviously wants the interest rates to come down, and if Jerome resigns and we get a new person in place, then that new person is likely
right.
to cut interest rates, and it could be very positive for stocks.
Yeah, yeah. Usually, yeah, stocks perform well with lower interest rates. Um, but even, I mean, it's so hard to know, like, because the market's been going up so much this year and last year. So I think we're kind of pricing a lot of that stuff in. So if it does happen, they actually do cut the interest rates. Seems like the opposite happens. People are like, how come the
Yeah,
market is going down? And people don't understand it because it's all priced in. Um, but yeah, but definitely it's going to be helpful if they cut rates. But you can only do that stuff for so long. Eventually, it has a bad results. If you if you look at these other economies, like I think Japan has been at zero inflation or negative, and their rates are for like 20 years now. So, but that's the U.S. where we have such a big, strong economy that we're resilient. We can handle these type of disruptions for even a year or two. Um,
okay. Well, in my final question, do you have any final thoughts that you'd like to share about investing, any stock, your journey before we finish?
um, no, I mean I do have a lot of invest in indexes like the S&P 500 because I don't know if I can beat the S&P 500. I'm not even sure if I have beaten it since I started. So I think it's safe to just pick either an index or it. Even if you want to invest in individual stocks, it's fun. Um, but holding long term, at least for me, seems to be the best result. Trying to pick companies that seem strong and make sense. Um, but if you want to gamble, you know, nothing wrong with that. It's your money.
Yeah. Okay. Well, thank you very much for doing this.
Yeah, sure. Thanks for inviting me.